What is the difference between a VA and a conventional loan? VA loans do not require a down payment. That's probably the biggest advantage of having that VA home loan benefit. And that's what it is. It's truly a benefit for the people who have served our country. Not having to make a down payment, having to save and have that burden of coming up with the minimum required down payment is probably the biggest differentiator. But there's also no mortgage insurance. On a conventional loan, not only are you having to come up with a down payment, but unless you have 20% down, mortgage insurance is going to play a part in your monthly payment in some way, shape, or form, typically. VA loans require a funding fee if the service member does not have a service-connected disability. This funding fee can actually be taken care of through the loan amount itself. And then if that service member, if that veteran does in fact have a disability rating with the VA, they do not have to pay this funding fee. So biggest differences, I would say, in summary, VA does not require a down payment. VA does not have mortgage insurance requirements. While they do have a VA funding fee, it can be taken care of through the loan amount itself, so it's not an additional out-of-pocket expense. And if there's that service-connected disability, you don't have to pay it at all. Whereas conventional financing will require some sort of minimum required investment, which is your down payment. It will likely have mortgage insurance in some way, shape, or form, whether it's paid monthly or one-time cost to kind of buy it out, if you will. And then there's no funding fee or anything like that on conventional loans. So really, it comes down to the specific individual. It comes down to what makes sense financially. Every situation is going to be a little bit different, but typically what I find is if somebody is purchasing a home, they do have access to the VA loan, that is typically going to be the more financially beneficial route to go.